let's again, focus on earnings. Once again, we have Punjab National Bank. The third quarter slippages came in at a 38-quarter low. Net interest margin too came in at a 10-quarter low itself. Deposits, however, have risen sequentially. Ashok Chandra, who's the MD and CEO of PNB, joins us to discuss the numbers. Thanks a lot for joining in and taking these questions. So let's talk about both slippages and the NIMs itself. Slippages at a multi-quarter low. Where do they go from here? And NIMs, they've fallen to a 10-quarter low as well. The question is, with the RBI expected to cut rates in the upcoming policy, where do these NIMs go from here?
Good morning, and just to give me some time before I move forward, yes. I express my sincere thanks to my 1 lakh plus employees, starting from armed guards to service staff to my entire officers community, customer service associates, 18 crore plus customers and all the investors for supporting us and reposing faith in Punjab National Bank. Now, coming to your specific point, one thing which you have already mentioned is the slippages have come down. And this slippages, which is around 0.68% of our total portfolio, I think definitely this ratio is going to continue and we will be below 1% in the slippages front. We have robust slippages monitoring system in place, and I don't think any further the improvement or further drop will be there in the slippages thing. I think we will be able to contain our slippages. Second important part of coming to the NIM part, before that, the recovery front also, and the recovery which is happening in the interest component and the TW recovery, that has also picked up very well. Yes, in this particular quarter, Q3, there has been some drop in the technically written off account, but still we are able to maintain our NIM between 2.9 to 3%. And there has been a drop of around 7% TW recovery if you compare to the previous quarters. And I am expecting that in Q4, there will be substantial recovery will happen in the TW front. And definitely we will be in a position to maintain that NIM between 2.9 to 3%. I'm very confident about it.
All right. Hi, sir. Good morning and congratulations on a good set. Where do you see your NIMs headed, though? You know, I'm reading a brokerage note. They are looking at the improving asset yields and the potential to grow faster than the system. So, say for FY26, where do you see your NIMs headed to? Point number one. Also, if you could tell us, what is the credit growth outlook for you? There has been some slowdown for the industry at large. For you, what should you end this year with? And on that base for the next year? Please go ahead.
Yeah, first I will touch our credit growth part. The guidance which we had given, it was in the range of 10 to 11%. But we have already grown up to this quarter by 14.68%. And I'm very hopeful with the credit growth and the credit sanctions in pipeline. We have 1.15 trillion sanctions in hand, and definitely some disbursements are going to happen in this quarter and taking forward in another quarters. So with that momentum in place, I'm expecting that credit growth for the entire year will be in the range of around 12 to 13%. And deposit front also, bank has done very well. And we are one of the few banks who have grown in the deposit higher than the credit. That was one of the concerns for the regulator also. But the absolute number also, if you compare that, there is a growth of 70,000 crore in absolute number in this particular quarter in the deposit front. And in the credit growth also in the absolute number, 50,000 crore growth is there in the credit. So we have grown faster in the deposit and overall, if you see the overall business growth also, it is around 15%. So I'm very hopeful that the credit growth 12 to 13% and the guidance which we have given in the deposit also 9 to 10%, I think we will outbeat that. And we will be growing at a speed of around 11 to 12% in the deposit also.
All right, 11 to 12% growth in deposits, 12 to 13% in advances. NIMs maintained between 2.9 to 3 odd percent. Could you give us a sense on where you are looking at asset quality? Because we have seen a decent improvement quarter on quarter in both your GNPA and your net NPA. Where is your intended target for these two ratios?
We had a very long legacy issues of the NPS, and for the last 3 years, we have brought it down. And I'm expecting that by end of this particular quarter and end of this financial year, the guidance which we have given in the GNPA is 3.75%. I think we will be able to achieve that. And the net NPA also, the guidance which we have given is below 0.5%. And already we have achieved a 0.41, and I think we will be below 0.5%. So we will be achieving all the guidance which we have given in the asset quality front.
All right, Mr. Chandra, it's not just your 1 lakh employees that will be cheering this commentary. Your shareholders as well will be quite happy. But they'll also want to know, what is Mr. Chandra going to do? Does he require more capital? Do you all have any fundraising plans as of now to fuel growth from here on, or are you all comfortable?
See, if you see our CRAR, we are already at 15.43%. And in that CRAR, we have not factored the net profit which has happened in the system up to 9 months. Already around 12,000 crore of net profit has already happened. And I think the end of this financial year, somewhere I think around 11 to 12,000 crore of profit, which will be plowed back in the capital. And we will be very, very comfortable in the capital front. This year already 5,000 crore of QIP we have raised and 3,000 crore of Tier 2 bond we have raised. And as of now, I don't see any challenge on my capital front. With the growth which is we are planning at 11 to 12, 12 to 13% in the credit front, I don't see any challenge in this particular quarter. And going forward also, I don't think any capital raising is required at this moment.
All right, just before we let you go, if you could give us two numbers. One is your outlook on your CD ratio when it comes to, rather cost to income ratio, not the CD ratio. And the second one is if you could give us a sense on your return on assets as well. If you could give us the aspirational numbers on both cost to income and ROA.
Yes. Cost to income ratio, yes, I think PNB is a little bit higher among the 12 public sector bank if I compare. We are at around 54%. And I don't think immediately in this one quarter I will be able to reduce this. But I think going forward in 25-26, definitely we will see that we come out with some strategy wherein we can reduce this cost to income ratio. And I think that is one aspiration which we are all having at that top management level also, that can we bring down to below 50%, and it is a very, very ambitious goal. And we will come out with the action plan in the 25-26 financial year. But this year, I think we will be holding to between this 53.5 to 54%.
Okay. And ROA?
ROA, yes, we are at 1% plus, and I am very confident that with the recovery measures in place, the activity which we are happening in the recovery front and containing the slippages and the 97% PCR, which the bank is holding it. So today, any recovery which we are doing it either in the gross NPA or in the technical write-off, I think this is adding to my bottom line. And I'm very hopeful that ROA definitely it will be 1% plus.
Okay, all right. Appreciate you joining in, sir. Thanks a lot for joining in. You're sounding very optimistic about the future. We're going to hold you at all these numbers. We wish you well, and we'll catch up with you sometime during this quarter or the end of it.